Hello and welcome to this lecture video. In this video we are covering Chapter 19 homework. So if you remember in our last class we covered through question 4 of Chapter 19 homework, and so in this lecture video we're going to go all the way here. We're going to finish up through number 16, okay? Alright, so let's take a look. So I'm on questions 5 through 8 of your Chapter 19 homework over here. So it says the following information is available for Loctite Company, which produces special order security products and uses job order costing. So remember, with job order costing and process costing, those are different types of product costing systems. Job order costing is used when a company makes unique products to customer specifications. Process costing, on the other hand, is used when a company makes similar or identical products. So we're looking over here, we have our inventories, raw materials, work in process, finished goods. So this is beginning, because it's April 30th, and so you could look at this as end of April or beginning of May, and then end of May. Okay, so we purchased some raw materials, and then we paid some factory payroll, and then we had some indirect materials, indirect labor, other overhead costs, and then we have our sales. And then here we are given our overhead rate. And so remember, the way that we would determine this is by taking estimated total overhead divided by estimated total allocation base. But they're so nice, they gave us the rate. Okay. So now what we can do is we can look over here at our cost flows in our question 5, our cost flows in our job order costing. So we look over here and look at the cost of our direct materials used. Okay. So remember what I was talking about in some other courses where I was saying you have to figure out the cost of the direct materials used, because that's what goes into calculating cost of goods manufactured. So the way to figure out the cost of the materials used is you say beginning materials plus purchased minus ending. So remember, that's what we talked about before. You have a couple dollars, $5 to start the night. You go to the ATM, you withdraw another $50. You have $55 to spend. Wake up the next morning, you have $10 left over. How much did you spend? You spent $45. So you do that type of math all the time. It's the same thing here. So we have our beginning, which is end of April, right? Remember, because that's beginning of May, end of April, beginning, and we have our raw materials purchases. Then we have our ending. Now, the one thing that's a little bit different here is we also have these indirect materials. There's $15,000 worth of indirect materials right there, okay? So we also have to subtract that to get to the direct materials used. All right, so we do have to take into account these indirect materials because they come out of raw materials and then they go into factory overhead. So if we look at the T accounts right over here, to get to how much materials was used, we take this plus this, minus the 15, minus 52, that gives us the 186. Now that 186,000, that's our direct materials used. Remember, that comes over here to our work in process. So then we start our beginning WIP plus our materials used plus our labor. Now, how did I get 265 for labor right over here? Well, remember, we have total factory payroll right over here, 345, but of that, we do have some indirect labor. Okay, so we have to then subtract that out to get to how much direct labor was used. Okay, then the other thing that we have to do is calculate the overhead applied of 185,500. So if I come over here and I take my 265, which is my direct materials, and then what I do is I multiply that times my rate of 0.7. That gives me the 185.5 right there. So then I have my beginning plus my materials used plus my labor, my direct labor. And again, the way we got that is by taking that total labor minus the indirect, and that gives us the direct. Because remember up here, this is total factory payroll, which includes direct and indirect. So that means you have to subtract out how much is indirect to get to how much is direct. And then we apply our overhead, which we already saw right there. Okay, and then what we do is we apply our formula to figure out our cost of goods manufactured, beginning WIP plus materials used plus labor plus overhead applied minus ending WIP gives us our cost of goods manufactured. Then we can look at our finished goods, beginning finished goods plus that cost of goods manufactured minus ending finished goods gives us cost of goods sold. And then what we have over here is our factory overhead. this is all from above, our indirect materials, indirect labor, and then our overhead costs. Remember, the debit side of the factory overhead is the actual overhead incurred. The credit side is the overhead applied. So remember, the journal entry to apply overhead is debit WIP, credit factory overhead. So that's why you see that credit right there. Then we can look at our partial income statement. We can take our sales, which is given to us up there, minus our cost of goods sold, which is right here, gives us our gross profit. Okay. Then you can see the explanation basically which goes through everything I just talked about, but I'm showing it to you here for the lecture video. Let's take a look at the journal entries. So raw materials purchased for cash. We have the purchases of 210. If it's purchased with cash, it's debit raw materials, credit cash. And then direct materials used. We calculated those direct materials up above by taking we had to back into it by figuring out from our T accounts right over here, right? That's where we got that 186. So direct materials used is debit WIP, credit raw materials. Indirect, though, was given to us at 15,000. That goes straight to factory overhead. Okay. Looking at number 7, direct labor used, debit WIP, credit factory wages payable, and then with our overhead, which is given to us, debit overhead, credit factory wages payable. So remember, this is our indirect. This is our indirect labor, comes into factory overhead. Our direct labor goes straight to WIP. And then we paid our payroll, which is basically just paying off a payable, debit to factory's wages payable, credit to cash. Okay. And then when we look at our journal entries for overhead, so this was those other overhead costs, which is given to us up above, 120,000. Okay. And then we credit other accounts. We don't know what those are, so we're just saying other accounts. And it even says to do that here. And then to apply overhead to work in process, remember that journal entry is debit WIP and then credit factory overhead. Okay. And then there's a little bit more explanations right there. All right. So let's come over. Let's look at number 9. So again, calculate what's our predetermined overhead rate for the year. We take our total estimated overhead cost divided by our total allocation base, gives us our overhead rate. And then what is the total cost of the job? Well, the total cost of the job is going to be equal to our materials plus our labor plus our overhead. So basically in every single situation, right over here, right? Here's my overhead rate, 130%. How did I get 910 right over here? Well, I can just go equals 700 times 1.3. That gives me that 910, basically 130% of the 700, 130%, 130%. So to get the total cost of the job is equal to total direct materials plus total direct labor plus overhead applied, gives us that total cost of the job right there. Let's look at number 10. Again, calculate the predetermined overhead rate. And so what we're going to do is we're going to take, in this case, we're going to take our overhead applied, which is given to us right over here, divided by our direct materials cost, because it's saying it's based upon direct materials cost. So this is the base, $1.5 million. That gives us an overhead rate of 40%. So basically what you're trying to think of here is what percentage rate times 1.5 million gives us 600,000. Repeat that again. What percentage rate times 1.5 million gives us 600,000? Okay, so that's what you're trying to back into. So you can just algebraically take the overhead cost divided by the direct materials cost that gives you the overhead rate. Okay, and then we'll look at required 2 right over here. Only one job remained in work in process at the end of its direct materials cost is $30,000 right over there. How much direct labor cost was assigned to it? Okay, so one job. So what we have is we have the total cost of the job in process at 50,000 minus that 30,000 right over here, right? Minus that 30,000. That gives us the, and then the overhead applied is 40% of that 30,000. So that's where we got the 12,000. And then we can back in to figure out that, the labor cost down here. Okay. And so that's what we're saying right over here, less that overhead applied. All right. So, And where do we get this 50,000? That's right over here. Okay, that's right there. Let's look at number 11. Determine whether there's underapplied or overapplied overhead. So actual overhead is going to be given to us at 215. Okay, and then our applied overhead is based upon our rate. So what we have to do is we have to take that 345 minus the indirect labor times 0.7, right, which gives us our overhead applied. That's what I was saying right over here, 185. And then here's our actual overhead, okay, which is our 215. So you can see that right over here. And so is it underapplied or overapplied? It's underapplied because your actual is greater than your applied. And then to close it out to cost of goods sold, we will debit cost of goods sold and then credit factory overhead. All right. Then let's look at number 12, right over here. Factory overhead computed, applied, and adjusted. So at the beginning of the year, again, is predetermined overhead rate. Overhead cost is $750,000. Direct materials cost is $625 at the year end. The company records show that actual manufacturing overhead is $830. Actual direct materials cost has been assigned as below. Jobs completed and sold. Jobs finished in finished goods inventory, jobs in work in process, and then the total actual materials cost. Compute the overhead rate. Again, what we do, overhead costs, and then if we apply it based upon our direct materials cost, that's our base. So estimated overhead divided by estimated allocation base gives us our overhead rate. Okay. Determine the overhead costs incurred in the amounts applied to jobs using the predetermined overhead rate. So what we do is we say, here's our actual overhead. Okay. Our actual overhead. And then our overhead applied will be equal to our 685 times our 1.2, which gives us 122,000. That's the applied overhead. So in that case, actual is greater than applied overhead. And so it's underapplied by $8,000. And so what do we do in this situation? And where do we get that actual overhead, by the way? It's right over here. What do we do in that situation to close it out to cost of goods sold? We debit cost of goods sold, and then we credit factory overhead. Okay? All right. So I'm going to stop this lecture video now, and